would like to know the answer of when a bull run will start. No one actually know that, and we have the interest to actually know that from a fundamental point of view. CME Group and Bitstamp came up with the finding after their study, and that shows like 6 months, 45% of investors will actually consider jumping in digital assets, and 75% of them are considering to jump in to this opportunity of digital assets in a year. And then in 2 years, 97% of these institutions are actually going to recheck the opportunity of digital assets. So that's not a long time frame, right? Now, what leads us towards reaching huge price volatility expectation? It's both fundamentals and technical analysis. On the fundamental side, digital asset is the future and smart money is actually flowing in. Bank of England governor indicates central bank digital currency is coming soon. China came up with one, right? Thailand is recently highlighting that their currency is ready, and now it's UK. So one also need to consider that when UK issues a central bank digital currency, EU won't actually sit back, because the Brexit and those drama there, that will actually push the European side as a whole. So as Europe and Asia enters into a new world of finance, United States of America will be due as an economic player. Now they're a huge economic player, right? So soon they will also have to start with their own central bank digital currency, or else they're gonna fall far behind. But at that time, we are getting news like US government misses deadline to release cryptocurrency regulations. So this may be a kind of a cloud which is just hovering around the reality or the truth. But we actually want to go through and check what actually is happening behind us. Welcome to the Scientific Investor channel, where we discuss crypto and science behind investing regularly. Now, along with all these fundamentally strong news, I also have something which is not that positive but not that negative. This is about a new token which is XRPHD, but the white paper, as I read previously, didn't actually have anything to compete with XRP. But now when I read through the abstract and details of this one, there is something kind of a bit disturbing. We'll actually go through that document in Scientific Investor channel in detail. Now, when we actually look at this particular document, it is actually a presentation from Santaro, and here they actually detail about the blockchain technology as a whole and how it differs from distributed ledger. Now, the distributed ledger is of two types, which is permissioned and permissionless, right? Now, this is actually a report from CME Group back in 2016. Now, the next document which we will be going through is from Symmetry, and it is 2019 document, so it's a bit new compared to that one. And this document is from March 2020, and that's actually associated with Bitstamp and CME Group. So the research organization here is actually put out the intelligence about institutional adoption of digital asset trading. Now, there is a lot of stuff which we, the investors, have to actually understand in this particular report, which is in 2020. So what institutions are looking at, how they are going to come up with their own investments. Now, when we understand this report from United Nations, we actually have to understand about the difference, because they talk about IMF, they talk about OECD nations, they talk about how the giants are actually looking at this particular investment space and the opportunities ahead. So how to treat crypto assets in the entire geopolitical macroeconomic situation. Now, this is actually prepared by the International Monetary Fund, which is the IMF, and we can actually see Ripple and other crypto assets named in, and they are actually looking at how this actually finalizes the settlement or the finality of that one. And what you have to actually understand is they are actually highlighting distributed ledger technology here, and when we see this in the previous one, we can understand now this one is back in 2016. Now, quantum computing or new technology overtakes blockchain. When you hear this, don't think that we are behind, because blockchain, the example is Bitcoin, Ethereum and others. Whereas DLT, distributed ledger, it's XRP, which is permissionless, and Ripple's native, Ripple controlled Ripple Net, which is permissioned distributed ledger. So that's different. So when you actually see things like this, you actually have to understand. Now, when we actually go in detail for this particular report, that's Ripple's digital asset report, where they talk about XRP and how they grade it and how they look at it as an opportunity. Here they talk like this came in 2016 and this one is in 2019, right? So here they talk Ripple is one of few companies out there that utilizes DLT, distributed ledger technology, to solve real problems for real customers. Now we heard that a lot from Brad Garlinghouse and other from Ripple, the company. Now, this leads to one of the main criticism of Ripple here, the fact that selling technologies that do not use XRP. Now, this was back in 2019, right? At that time, we had Xcurrent, XYR, and XRapid. But as of now, they have actually changed that. If you remember what Dilip Rao stated back in 2018, you can actually understand. First, getting them on board. That's the first thing. Test distributed ledger technology. Understand the benefit of this technology. Then give them an option to use digital asset to solve this. Then make the platform fully ready for the digital asset. And now it is ready. With the on-demand liquidity platform, they can actually use the messaging as well as the on-demand liquidity. Now, when we say the on-demand liquidity in the newer document, what is the real consideration which all the institutions consider when they are going in as an investment firm, or when they actually look at the space, what does they actually consider first? It's liquidity, then it's integrity and security. So the proof of work thing you have to understand is compromisable, right? And we actually saw that previously with Bitcoin Cash, we're going through that 51% attack, right? So when institutions are actually looking at this, these are their prior considerations. So now coming back into this one, if we actually look at the opportunity, they actually talk about a $1.25 quadrillion opportunity in a year, which is dealt by Swift as of now. And we have actually seen previously Bank of America directly highlighting an article which is Ripple versus Swift. So if you consider that, that's $1.25 quadrillion. And here they also talk about Nostro accounts and how it's going to change. And then its competition in the blockchain space have taken a different path. Now, when they say taken a different path, first keep this in mind. Ripple is the company which is not trying to replace the banking sector. On contrary, it is actually business-to-business products are architected to fit within banks' existing net infrastructure. So that is a new infrastructure for banking networks, right? Whereas the others, like as you can see here, Stellar, Dash, Omisigo, are actually trying to do the opposite. Its competitors in the blockchain space have different path and provide B2C, which is business to customers directly, solutions that aims to replace existing banking infrastructure. So you actually have to understand what will be successful in coming 5 years, in coming 10 years, in coming 20 years. Will the banks go end? Will the banks die? The chances for that looks gloomy for me, because as of now governments and banks are it looks like it's gonna stay there for a long time, at least for my research. Based on my research and my thought process, I actually believe that. So Stellar is often considered as a B2C alternative to Ripple, trying to connect people to low-cost financial services. Now that actually works well for the financial inclusion area without banks. So that is actually a market which can be seen as an opportunity. But when you actually look at the existing market, when we say the value like $1.25 quadrillion, these are actually associated with banks, with governments, the regulated institutions. So that is the actual thing. Now, when we actually see these like Dash and Omisigo also works for these, and we come back, Ripple is not a traditional DLT company, as most of its market growth comes from traditional space. So the difference is there, right? Whereas the others work in the opposite side, whereas here the traditional space is being attacked and disrupted by Ripple, the company. Now, when they actually compare it with other projects, you can actually see this is proof of work. Again, Omisigo again as proof of work. So automatically their scalability is low. Now, when you consider the market cap, you can see the huge difference there. Now, that was back in 2019. So as of now, you can see all of them reduced, right? Now they actually talk about the competition, GPI network systems and all. We actually discussed about that whole in detail, in depth. So we don't actually go much in. Now, when we actually consider the entire thing here, you can actually see Western Union's market cap is 8.2 billion, whereas Bank of America 252 million, and then JP Morgan. Now, when you see JP Morgan here, you have to actually consider one thing. JP Morgan has their own coin for intra-bank settlement within their network. It's actually okay to use that, but when they actually consider it from one network to another, they need something to bridge their own coin, right? So they actually created a walled garden. Now they need a bridge asset to actually go outside. Now, when you actually go through this one, this now is back in 2019, shows the top 10 wallet distributions of holding. You can see majority of them goes back to Bitstamp. Now, why I'm showing you this one? Because this report, when it is shown like Bitstamp and CME Group, both of them actually associated with Ripple the company, and they have interest in XRP the asset. Now, when we actually consider this report, this actually gives you a lot of information when you actually read through this. But in one video we don't have the time to actually go through entire stuff, but we actually cover the important stuffs for you guys. Now, when you actually look at the institutions which are looking for the adoption, the key ones are like CME, Buck, Coinbase, Gemini, Kraken, Bitstamp, like which actually uses or trades this digital asset space. And when you look at the particular color here, you can see CME, which is having majority. As we move in time, we can actually see that CME is a key player in this asset class. So as we look at the adoption rates among the traditional institutions, we can actually see as of now we don't have much of adoption, right? But what is lagging? Regulation is lagging, and when the regulation actually comes in place, automatically this will be starting to skyrocket. But at the bottom, you also need to understand this. Some venues such as Bitstamp have obtained a license that regulates them within EU as a payment institution and obtained a BIT license in the US. So for them as an organization, they now have that regulatory clarity, right? And for Bitcoin and Ethereum, they have actually openly stated that these are not securities. So automatically that's out of the way. So these investments will be going, majority will be going through them as of now until we have the same regulatory clarity for XRP as the asset. Now, traditional exchanges such as CME have an advantage with gaining traditional institutional flow into digital asset space since they are regulated by CFTC for derivatives. So you have to actually keep in mind, once these digital asset derivatives are going to come in, you actually understand that CME, Bitstamp and others will more weigh in for XRP, that's for sure, right? So as we go in and see this particular adoption, service providers are in this one more, right? Now, when you actually look at different aspects, now in this one, it's actually talking about, the reputation, the regulation, the security stuff and all. But whereas when we actually go down and look at how it is viewed as of today, now this is back in March 2020, they actually talks like this. All crypto trading firms surveyed were trading a broad range of spot cryptocurrencies and nearly halfway trading Bitcoin derivatives. Of the traditional trading firms surveyed that traded digital assets, 57% were trading Bitcoin derivatives and 27% traded Ethereum. So what we just said is coming here, right? When the regulation hits, automatically everyone would be doing that. That's the reason, say, back in time, Yoshitaka Kitao from SBI actually stated, when we go live, we are going to be the first or best exchange. And that's the reason, because they are high on XRP, and when they have that kind of regulatory clarity, it's, for sure there is nothing to actually compete this, because these institutions are considering liquidity first, integrity and security, ease of connectivity, and then this one. So when you actually look at that, speed and performance is also an issue there. They also consider that. Now, when you look at different exchanges, you can see the volume, how it goes, BitMEX, Binance, Bitstamp, CME, and rest like this, right? Now the key structure comes here, the digital currency space. Now the 5 most traded digital currencies, you can see BTC USD. At the same time, you have to understand BTC has a lot of pairings along with Ether because they actually came way back and they have the regulatory clarity in terms of say CC saying it's not a security. That's the main thing for institutional investors, and still XRP USD is there. Now yes, the volume for that is comparatively very low with competitors in top 5 as pairs, but you have to actually consider that is without the regulatory clarity there. Now when we actually say this is a bit odd from this one, but still Bitcoin is here with the volatility, and you can see energy form is like this. So that is huge volatility in a traditional investment, right? Anyway, now when we actually jump into this one, we can actually see one study actually suggests that majority of the firms are not into this one. However, of those traditional trading firms, 97% will consider the opportunity in again 2 years or less. If you look at the chart, you can see 1 year is this one, right? And 6 months is this one. So in 6 months, majority, say 45%, will be considering this coming into this space. And in 1 year time, you get the majority, say 70 to 80% coming in. And in 2 years, 97% of investment institutions are going to consider this one. So yes, we actually have that dynamics where Europe is coming in, the entire Asia one by one is actually coming in. So automatically the space gets a bit congested, and automatically that makes competition. Now, however, most sell-side firms are understandably reluctant to offer access to the market unregulated by their home authorities, and that's where currently US is kind of lagging behind. When we actually read the expansion here, say expansion therefore is likely to catch up of regulatory frameworks in US and EU. So the digital asset space will actually lag if these two markets are lagging behind. And as of now, we know that EU is coming out and they are going to give clarity there, but US is kind of lagging behind. We actually have articles stating the same and giving you more clarity about that. Now automatically when we actually look at the same space, institutions when coming in won't be like this small thing. They won't be coming in step by step. Yeah, they will be coming in step by step, but each step of their small step will be huge step considering the retail investment firm. Now when they actually talk about connecting the world with the finance, you can actually see that they support trading of the top 3 here. Now that was 2020. Still we can understand there are other pairs too. So automatically when we say these stuff, we actually need to keep this in mind. Ripple as an XRP or Ripple as an investment is there. You can see the investors or the partners there in this one, which actually shows Google Ventures, Standard Chartered, Accenture, CME Group and others. So when we actually, like in yesterday's video, we actually went through Standard Chartered, then Google Ventures. So one by one we are going through each documents and how they actually perceive this. Now in this particular one, they actually showing you the partners of Ripple, the company. So if we actually look at this one, this is actually a huge one. We should not actually neglect this one, because when we see here Google Ventures, Standard Chartered, UBS, and these are well reputed institutions all around the world, along with central banks. Say for example Bank of England here. We have actually went through huge. Now yeah, there lies a bit of conspiracy when we talk about these kind of stuff. Say W3C connects with R3, and then here Bill and Melinda Gates Foundation. All of these stuffs tied up with Ripple actually kind of scratches the area of conspiracy, but we don't actually care. But we are here for investing, right? And when we look at Bank of America and others, we kind of understand that it is kind of getting as a network which is connected all over the world. Say MoneyGram actually went in and they actually had a new partnership. So automatically this network is actually expanding well high, right? So I actually had a document, I think I missed it, but anyway, that's the reality, right? As we go further, we can actually understand this is really happening and how it is taking that one step ahead. So when we actually read through this document, we can actually understand entire space is actually waiting here, and once we get that green signal from the regulators, this is gonna go much high, because when we talk about the macro digital economy, the token economics, they actually consider Ripple's native currency primarily can be used by banks to source what? Liquidity. And then XRP will be used as a settlement currency. Now that was the product of XRapid previously, which is rebranded as on-demand liquidity. Now here when we actually see this, Ripple has already connected more than 200 financial institutions via the RippleNet, where most of the transactions are settled through USD and Euro. Now, do you understand how this actually impact here? In this new document, we need the regulatory clarity in these two particular corridors, right? US and EU in the institutional adoption area, right? And we also saw that institutions are, even though they say there is no clarity, institutions are already dipping their toes in here XRP USD, right? So when we have this one, automatically this is gonna skyrocket way higher. Now, speculation, XRP is traded on many of the popular crypto exchange. Now that is majority of retail investors as of now, and we actually understand that once the institutional giants come in, this is gonna be so huge, right? So at that point, from there onwards, the entire thing of supply and demand will be crushed automatically, because the escrow releases are like 2 times in a month. Why is it now, right? They actually changed it automatically change the space. Instead of 1 billion a month, now 1 billion a month, but now it is split into 2 parts and coming out like that, right? So it will actually enable them to provide that liquidity which they actually need to draw out if they need. So automatically they are waiting for the decision from SEC. However, some experts believe that Ripple is already too big to fail. Now, it's not only some experts. Everyone who actually see this document and eat at least 1 or 2 times a day can understand now this is not too big to fail. This is kind of, even if you call it a conspiracy, now this is kind of the new infrastructure for finance. Now, at the same time, when we actually say all of this, there is one thing to consider more, which is what we actually showed you in the beginning, right? XRPHD. Now, initially, when I actually heard about this thing and read something based on this one, I actually saw that the scalability was so low. Now, yes, it was better than BTC, Ether and all, but it was, so low compared to XRP. So I was confused how it can actually even compete with XRP. So, there was a lot of things which I was actually considering how this can actually go in and all. But here it shows like the white paper aims to propose XHD. Now, when they say XHD, keep in mind that is XRPHD. Say background, they say XRPHD, which is a Ripple coin, referred to as XHD. It's an innovative digital currency based on conditioned proof of capacity. Now, this is kind of a maybe new for majority of us, because previously when I heard, I thought, it's not even worth going through this particular topic, because this can just cause disturbance or confusion within the community. But when I actually read the white paper here, I was kind of confused at one end, but looking at the specs, I was like, no, this is not even gonna do any harm for this, right? But when we actually read through the entire stuff, we can actually understand one thing. They are actually stating that they are improving something from XRP and making this one even better. So XHD mainly uses distributed bookkeeping to solve the problem of real-time cross-border payment. Compared to XRP, HSD has following advantages. Now, don't worry, we'll actually go through every possible detail about XHD, which is XRPHD in this channel. I'm doing my research on that one. As much as document I'll collect, I'll go through that, I'll analyze that, and I'll give you guys with majority of clarity with that one. Now jumping to the news and updates here, this one it's not a news, but when I saw this one, I actually found that one interesting. It's showcases IMF as replacing XRP with calling them as a phoenix, and then it will pump soon, whereas BTC is gonna go down, that kind of stuff there. So if you actually want to read that, you can actually go to Einstein or directly Baba Kirk's. Now, this document from Bank of England governor highlighting that the possibilities here is not about talking about, few years, like 5 years, 10 years. They're talking about next year or so it's coming in. And at the same time, we can see US is delaying it. Now, we kind of highlighted this in between, right? But when we actually look at the central bank digital currencies era, we actually can see nations are coming in and doing them. Now, World Economic Forum, when we actually consider them, they actually have put out documents which we here has described in detail, and along with IMF documents, right? So automatically when we look at some of the Fed's document, like say we went through some of the documents and we understood that there is a potential for ripple asset, but we never saw the potential for others. Now, when we actually go through these slides, we can actually see what they are actually trying to look at. The state of central bank digital currency proposal as of 2020. Now, when we come down, this is from Bank of England. They kind of cited back to Bank of England. We actually went through that, right? Central bank issues something, right? They have the bank notes there, reserves there, retail CBDC there. So in this particular one, they are looking at retail CBDC. However, previously in the Bank of England side, when we, the scientific investor family, went through and checked, we actually didn't get that one. Instead, we had a different framework, a bit more different, right? And when we actually look at this one, if you look at the proof of concepts with central banks, you can see that 2018 was like this and 2019 is also like this. So when the price is going down for digital assets in this market, last 2 years the central banks are engaging more and more. So that is, huge fundamentals than anything if you consider it like that. Now they are actually huge in way of positive side. You can actually see there's a lot of things. We actually went through that different countries looking at different aspects. Now IMF and World Bank actually urge G20 nations to extend debt suspension. So automatically when we talk about this stuff, just US has huge amount of debt. If you look at the corporate debt, if you look at the national debt, it will be somewhere around 65 trillion dollars just for one nation. Now if you look at the emerging nations, and every area, that's a huge liability for the world. And if they are kind of suspending this one as of now, or even saying okay, we can forgive this one after this, they actually need a new entire financial system, and they are taking this to that one, and maybe it's gonna be called as Phoenix. And when the Phoenix finally arises, you should actually look at science. Now this article for me looks like, you should be looking at XLM. If XLM surges, keep in mind last time XRP followed it afterwards. So that means XLM goes first, and then afterwards Ripple starts its volatility, meaning XRP will pump high, right? If the history is to rhyme, then this is going to happen. So when these other currencies are pumping, if you have a bit of them in their portfolio, that's cool, that's better, enjoy the profits. But jumping the ship from one which is kind of coiling up for the next push up is kind of the worst thing you can actually do. Now guys, that's all for today, and in the next video I'll try to find as much as documents as possible for XRPHD and I'll present it here. Now if you saw value in the video, please do support the channel, hit that like button. I'll meet you guys on the next one. Bye for now.